Hello everyone, welcome to the Elliott Wave Forecast.com YouTube channel. This is Henry and today is Wednesday, March 23rd. The time is 1:30 a.m. GMT. And for today we're going to be looking at the chart of the Nifty. Uh, this is a 45 minutes chart here. And we can see from this chart that we ended with 2 at 15,674, and that means we have already started with 3 on the upside, and within the wave 3 it subdivides into another 5 waves. So this is technically still wave 1 of 1, right? You can see the stacking here. So this is only in the blue degree, so this is part of wave 1 of 3, right? And you can see right here we rally in, so far it's only in 3 waves, 1, 2 and then 3. So might see a little bit more upside here to finish this wave 5 before we get a pullback and then higher again. So the bottom line here is that as long as we stay above 15,674, we can see for the upside, right? So it should be pretty simple and straightforward. Now zooming out in the Nifty, let's take a look at the daily time frame. You can see here on the daily time frame, this is, everybody knows about this is the March 2020. This is when we have a crash on the stock market because of the COVID-19, the first time, right? And from here you can see the Nifty continues to rally strongly on the way up to October last year, right? Then you can see this reaction here, and you can see if you try to draw a channel of some kind, now you can see that this rally from this low to this high, it seems to be, it belongs to the same channel, and then but then during this correction here, this belongs to another channel, right? This is a separate cycle. This is a separate cycle here. So that means this is what we call a, we can conclude that this cycle is finished. This March 2020, it finished at, during the October 2021, and then since then we've been sort of in a different cycle, and then in the latest sort of count, we are calling wave 2 completed right here, right? So if this is a wave 2, so that means you can say that this is your wave 1. So what we are looking at here is the idea that possibly the Nifty already ended the correction from the March 2020 and starts a new bullish leg. Now I know this is a very aggressive view, and for this view to be valid, right, Nifty still needs to be able to break above this previous peak, right? So until it breaks above this previous peak here on October 2021, we can always do what we call a double correction, in which you can see this is a 3 swing, right? It's a 3 swing. So this is a single correction in 3 swing. But unless it breaks above here, now we can do a double correction, which means that you will get another 3 swings down like this. Right, so you got 3 swing as your single correction. Double correction means 2 sets of 3 swing. So you will have a 1, 2, 3, 4, 5, 6, 7 swing when we are doing a double correction. Okay, now why don't we call a double correction, for example? Well, because we like to be forecasting the most aggressive way in the direction of the trend, and the direction of the trend is bullish, and you can see this pullback is also not impulsive. How do you know it is not impulsive? Because it's only 3 swing, and you can see in the extension here, this is clearly only 100% extension. So we don't have a 161.8% extension, which is typical of a wave 3, right? But now this one is a clear 3 swing ending perfectly at the 100% extension area, right? So all in all, this is a classic textbook 3 swing corrective structure, which ends again also textbook at the 100% extension area, right? From here we can see the reaction higher after a 3-swing pullback at the 100% extension area. So but now since we already react higher, now it is really in the true test. Is this really the end of the correction and we're gonna go to new high? If we are, then we're gonna break above here, and that will confirm this is your wave 2. But if it is not able to break above wave 1, then we can do double correction to 7 swing, and then you will have to move wave 2 lower like this, and this becomes your 1, 2, 3, right? And then it will find another support right here at the 100% extension to finish with 2 before it turns higher again from here. Okay, so this is the more aggressive view. Now the beauty of the idea that now everybody thinks that forecasters should know exactly every single swing, but the reality is we cannot know for sure every single swing in every direction, right? What we do know is we establish the trend, which is bullish in the case of the Nifty, and what we do know is correction is always in the form of 3 swing or 7 swing. That's what we know. So the beauty of this idea, of this kind of principle, is that let's say we identify the trend correctly, bullish, and let's say we are trying to buy this 3-way pullback. So you're buying it at the 100% because you know, okay, if it is correction, it has to be in 3 swing or 7 swing. So it's a 3 swing 100%. If anybody bought it here, then look at the reaction higher. With this reaction higher, if you bought it correctly at the right time, at the right area, then with this reaction, you could have already taken partial profit, for example, and you could have moved your stop loss already to your entry level or to the last low, and therefore your position practically is already what we call risk-free. Risk-free meaning that it doesn't matter anymore what the market is doing. If it goes higher, great, you make profit. If it doesn't go up and it goes down, then you already take partial profit, you already move your stop loss, so there's no harm for you even if it goes down and do a double correction. And that is the principle, guys, and a lot of people don't understand this, and what they are trying to do all the time, new waivers or new traders, is to trade every single swing, and then they think that if this does not happen exactly like this is, then the forecast is wrong. No, actually it's more than that, right? I mean, those are for people who first begin to trade. Yes, they try to think that every single swing is predictable and forecastable and so on, right? But in reality, it is bigger than that, right? So again, in this case, we know the trend is bullish. We believe any pullback is a correction. If correction is always in 3 swing or 7 swing and always gonna find support when it hits 100%. So then when you have that principle, you know this is the area of support from the Nifty, and if you did buy here at this time, it doesn't matter anymore, right? Because your position is already free. And then now let's see if we can extend higher. Now a lot of people misunderstand, and then they try to buy now, or they try to buy or sell or whatever it is, but now actually is not really at the extreme area, right? This area and the blue box is what we call extreme because it's a 3 swing equal leg. But when we are looking at this, now everybody now thinks that, okay, well, if the chart is calling for this, that means it needs to go up as long as it is above 15,674. Let me buy this. Well, even though yes, that can happen, but this is no longer extreme area, right? Because like I explained, if it doesn't break above with 1 now, we could in fact be doing a double. Now if it is doing a double, then this 1, 2, 3 equal leg is going to become extreme again, and this is going to become another support area again, which is very highly likely. If it really do something like that, this is going to find buyers again and go to new high, or at least a big rally like this, at least. Alright, okay, so that is the update on the Nifty, and as always, we have 14 days trial if you want to try our service. The link is provided in the description of the video. I'll see you all again next time. Have a nice day, everyone.